All right, let's get right into it. Today we're tackling a really big question in the business world. What's the real difference between a public and a private company? And more importantly, why should you even care? Think about it like this. You can pull out your phone right now and, in a few clicks, buy a tiny piece of Apple. But what about that awesome local coffee shop you love? You can't do that. Ever wonder why? It's a fantastic question, and the answer really gets to the core of how businesses work, how they grow, and how they're run. So here's how we're going to break it all down. First, we'll look at the two basic worlds of business. Then we'll explore the journey to an IPO. After that, what life is like in the public eye. We'll also cover why some companies stay private. And finally, what all of this means for you as an investor.
Okay, let's kick things off with Section 1, the two worlds of business. We're going to understand this fundamental split.
When you boil it all down, pretty much every company fits into one of two buckets. On one hand, you've got private companies. Think of these like your neighborhood bakery. And on the other, you are public companies, which are more like a giant skyscraper downtown. They're both businesses, sure, but they operate on totally different levels and play by a very different set of rules.
So let's start with that bakery. A private company is all about who owns it. It's held by a really small, closed group of people. You know, the person who started it, maybe their family, or a few private investors who believed in the idea early on. The key takeaway here is that you can't just buy a piece of it. Ownership is by invitation only.
Now, let's look at the skyscraper. A public company is one that has decided to sell off portions of itself to, well, literally anybody who wants to buy in. They do this through a stock exchange. That means anyone, including you, can buy a share, which is just a tiny slice of that company, and become a part owner.
So the big question is, how does a small private bakery turn into a massive public skyscraper? That transformation, that journey is what we're talking about next. It's all about the IPO.
But why would a company even want to make such a huge change? Well, it almost always boils down to one thing: money. Not just a little money, but massive amounts of it. The official term is capital. If you want to grow like crazy, build new factories, hire thousands of people, expand across the globe, you need way more cash than a few private investors can typically offer.
And this is where the IPO comes in. It stands for Initial Public Offering. But honestly, the easiest way to think about it is as the company's giant coming out party. It's the very first time they open their doors to the public and say, "Hey world, come on in and buy a piece of what we're building."
The process is basically a three-step dance. First, a company decides it needs that huge injection of cash to hit the next level. Second, it goes through the very complicated but exciting process of holding its IPO. And third, its shares are officially listed on a stock exchange like the New York Stock Exchange or the NASDAQ. From then on, they can be bought and sold by investors every single day.
But going public isn't just a one-day party. It changes a company fundamentally and forever. This leads us right into our next section, life in the public eye.
Before the IPO, ownership is super concentrated. The whole pie is split between just a few people. The founder might own most of it, with an early investor or two holding the rest. They are in complete control. They call all the shots.
And after the IPO? Boom. Look at this. That simple ownership pie is shattered into millions of tiny little slivers, held by tons of public shareholders all over the globe. All of a sudden, the original founders now have to answer to all these new part owners.
This chart does a great job of summing up the key trade-offs. Ownership goes from an exclusive club to wide open. Funding sources just explode. But, and this is a big but, look at the last two rows, reporting and scrutiny. As a public company, you have to open your financial books to the whole world, and you're suddenly under a microscope from regulators, investors, and the public.
You know, after hearing about all that scrutiny and pressure, you might be thinking, why would any company want to go public? And the truth is, a lot of them don't. And that's because there are some real advantages to staying private.
There are some huge benefits to staying private. The owners keep full control. They can steer the ship any way they want. They don't have that constant pressure from Wall Street to hit profit targets every 3 months, so they can focus on long-term goals. Plus, they get way more privacy and have to deal with a lot less regulatory red tape. So that just brings us right back to the central question, doesn't it? With all that pressure, that loss of control and privacy, why on earth would a company ever choose to go public?
Well, the answer is a really big deal. And it brings us to our final section, which is really where you come into the picture, your investing opportunity.
It all comes back to capital. This chart makes it so clear. The amount of money a company can raise privately is really just a drop in the bucket.
The money available on the public markets, that's the entire ocean. It's the difference between being able to build one new store versus 1,000 new stores.
That massive flood of money is what fuels everything. It's what pays for world-changing innovation, for huge global expansion, and for creating tens of thousands of jobs. It's really a powerful engine for economic growth.
But here's the best part, maybe. It makes opportunity democratic. The public stock market gives regular people, like you and me, the chance to actually invest in and profit from the growth of the world's most successful companies. You get to own a piece of the action.
So in the end, that line between private and public isn't just a technical definition. It's the story of a company's journey. It's a great reminder that every business, no matter how big it gets, starts with just an idea. And some of those ideas grow big enough for the entire world to own a piece.